The Business Confidence Index for the third quarter of this year was released today. We have seen a slight improvement in the third quarter of the year relative to the second quarter, and it's really worth bearing in mind when we think about the second quarter. It came out at a time where there was a massive depreciation in the rand. There were a lot of geopolitical concerns, which South Africa was a part of. So that really drove confidence in the economy down quite sharply. We now have seen an improvement to 33% in the third quarter. And this is worth bearing in mind, is actually quite impressive given that what we've also had during this quarter are a spate of attacks on trucks along the N3 corridor, as well as that week-long taxi strike in Cape Town. These had quite a big impact on economic activity during the second quarter, and yet we saw an improvement. At 33%, though, it is worth bearing in mind, that means only 1 in 3 of the people who responded to the survey were satisfied with business conditions. That means 2 in 3 weren't. And I think that reminds us that, we are still facing quite an uphill battle to really improve the economic conditions in the economy. When we look at the sectors that were surveyed, business confidence for building contractors is the only sector that actually saw a slight decline. It went to 41%. That said, this is the strongest reading out of all the subsectors. And when we think about the building sector, even before the pandemic, what had happened was that it was already declining. So it was in a really big rut. And so it has come out of this and, had boosts from floods, from the riots, where we've had a bit of a boost, and more recently, quite a big emigration to the Western Cape. However, we do feel that when we look at this activity that we've been seeing and we look at this level of confidence, it suggests that the sector is now starting to normalize. The first time we can really say this in a while, which is actually quite a nice thing to think about when you think about the economy, a little bit of normality. That said, within building, again, still regional kind of pockets of excellence versus areas where it's a little bit more subdued. And so there is still space for further improvement going forward. The manufacturing sector also improved, but, remains incredibly weak. And then when we look at the kind of different expenditure retail side, retail sales were improved the most out of all of the subsectors. And that is despite the fact that we've had such high interest rates. That said, we're also now at a point, and this is probably one of the things keeping business confidence, slightly stronger in this quarter, the fact that it does seem interest rates are probably stable now, that we aren't going to see further hikes, that inflation is coming down, and that a lot of that kind of geopolitical uncertainty that we were facing in the second quarter has also calmed down. We had a very successful BRICS summit. Nonetheless, when you look at the detail for retail sales, things like the interest rate sensitive areas are definitely struggling more, with your durable sales weaker than in terms of performance relative to your semi-durable and non-durable goods. Wholesale sector, very much the same kind of story. Finally, when we look at vehicle sales, also quite a strong improvement in confidence in the third quarter of the year. However, still quite downbeat, and showing us that despite the fact that we think that interest rates have peaked, that your interest rate sensitive sectors of the economy are going to be more vulnerable at these interest rate levels than they would at lower levels. So an improvement compared to the previous quarter, but definitely still a way to go to see more sustainable growth in the economy.